Hi everyone and welcome. My name is Robert Craven. I'm the founder of LaunchNatural. We're sitting here in beautiful Dana Point, California at the St. Regis Hotel where we come every year for the MBJ Summit. Highly recommend you check it out, mbjsummit.com. Sold out this year, of course, but for next year you might want to be here if you haven't been here before. It's really the who's who of the natural products industry. I'm sitting here with Greg Doherty, good friend from many, many years back with Poms Associates. Greg is really an expert on the insurance side of especially the dietary supplement industry, but it's related to the natural products industry in a deep, deep way. So I'm here today to talk to Greg as a CEO, a high growth company. I'm going to ask him some questions about what's going on in the space right now, and Greg's going to enlighten us on that side of things. Greg, why don't you start off by introducing yourself, Poms Associates, give us a little background, and then we'll jump in.
Sure. Well, I've been in the business for many, many years, mostly with large brokerage firms, but years ago rotated out of that and went to Poms Associates Insurance Brokers. We're located in Woodland Hills, just outside of Los Angeles.
Nice.
And shortly thereafter, I literally fell into the dietary supplement space because there were a lot of problems at that time with product liability costs, and in California, workers' compensation was going off the charts, and employers were having a very difficult time. So that's how I get into it. I've been doing this now for 8 years. We've got over 200 companies in our program, raw material suppliers, contract manufacturers, lots of retailers all over the country. And it's working out very well for us.
That's great. Yeah, Greg's got a great reputation in the space, and I really count on him as an expert when it comes to these types of issues. As a CEO in the space, my main concern right now is making sure I stay ahead of the certain trends, especially regulatory. We've got a new president that's going to trickle down
Yes.
To all the different organizations in Washington. Tell us some of the trends you're seeing that I should really be aware of as a CEO.
Well, it's kind of good news and bad news in my opinion. The good news is product liability insurance has been going down for about 3 years, and it's gone down in some cases precipitously, in some cases 60 or 70%. That's good for CEOs and employers of supplements. On the other side, speaking of regulatory issues, it looks like product recall is going to become a real issue soon. I didn't know this myself until about 6 months ago, but I learned that the FDA does not have mandatory recall authority. All the recalls you read about it basically are where the company's been coerced or otherwise what's the word I'm looking for? Otherwise
Forced,
well, whatever, to do a recall. That's when it hits the paper. You see, well,
Right.
so-and-so is doing a recall. There's a strong belief that the FDA, with all the new authority and money and power they're going to apparently get, will be given mandatory recall authority. And there's also talk that they will require a company to show the wherewithal to do a recall, either by financial statement or insurance. That could happen. And the issue right now is that product recall insurance, because supplements have been associated with pharmaceuticals by the insurance companies, it's available, but it's expensive. It's very expensive. And so I'm working with a couple of companies now to try and get the cost of that down and make it affordable in case it does become a mandatory type of a coverage to have.
So just to recap, you're saying that the government might pass legislation that forces a company to have the financial means
Yes.
to do a recall, and the
Right.
only way, especially small to medium-sized companies, are going to be able to do that is through insurance.
Because if looking at a financial statement, you can't really tell if they can afford a recall, how big it's going to be, so on and so forth. But with insurance, you've got something quantifiable. You can show the government and say, look, I have insurance. But again, the issue is right now, it's very expensive and limited availability.
And that's above and beyond the product liability insurance.
Excellent question. Most people think that they may have product recall coverage in their liability insurance or their product liability policy. It's not there. It's a totally separate thing.
Wow. You mentioned that the FDA doesn't have mandatory recall authority. Is that just come down from court decree? Is that what's happening? The FDA goes to the court then decrees it?
My understanding is that in most cases they can convince a company to do a recall. If they can't convince a company to do it, they've got to go to court to get it done. That takes time, obviously, and they may or may not be successful.
Right.
In most cases, the companies do the recall. But again, it's not mandatory. But in the new environment, some believe it will be.
Let me shift gears a little bit. That's an excellent point, and I want to dig a little deeper on that one. We deal with companies that are typically going through what we call the wall, right? They're fast-growing, smaller companies that are moving into mid-size range. So let's say $5 million company, $10 million company, $15 million company, they're pushing that wall on scale. They might be getting outside investment. Now they're looking at 20, 25, 50 million in sales. Can you talk a little bit about the level of coverage? I mean, a lot of small entrepreneurs, right? Smaller companies that don't have coverage or haven't even thought about coverage. When should a company start really thinking about that? I know in the beginning, but are there different elements to the size of the company and the kind of coverage they might have, or the liability or the risk? You understand what I'm asking?
Yeah, sure. Focusing back on the product liability insurance for just a minute. Most people, especially smaller companies, only buy the level of insurance that they have to buy, either one, to sleep better at night, or two, to satisfy a customer such as a retailer. Okay. Some people that don't have either of those requirements and don't necessarily want to sleep better at night still aren't buying coverage. And that's their choice. For example, an internet company, they don't answer to anybody except some individual customers. A lot of those companies don't have insurance, and they feel happy, they feel comfortable in that position. But as you get larger and you get into the retail, and then people have to buy limits of insurance, for example, for Costco or Rite Aid. And because of the expense of this insurance, it's come down, as I said earlier, but it's still quite expensive, and it comes right off the bottom line. People will buy just what they have to satisfy a Costco or Rite Aid, and that's really the answer. Is that most people do not buy any more than they really are forced to.
In your opinion, is that the right thing for these companies to be doing?
It's very difficult to say. My answer to that usually is it's like answering the question, how high is up? I don't know the answer. No one knows the answer. But again, it comes back to expense. People just buy what they really have to or are comfortable with.
Right, and we'll be talking in other videos about the ways to minimize risk in product development. You know, having the science in order and the processes that, you know, I can tell you we went through that with the FDA, came knocking on our doors at Garden of Life. We got our act together, so we felt like our risk was controlled. If you don't have your act together from a product development standpoint, science back up, your risk is higher. So you're going to spend the money. You know, my general counsel used to always say, you can pay me now, you can pay me later. You know,
Yes.
to some degree, that's the way it goes. So.
Well, that's a great point, because a big part of my job when I'm working with a company for product liability is to gather all of that information you just mentioned, all the safety data, the QC procedures, compliance with GMPs, who they're using as a consultant possibly in that area, all those things that when put on an underwriter's desk, he would say, gee, this company is doing what needs to be done, whereas the next company may not be doing it. That just lowers their
Does that
premium.
matter?
Yes, it does.
Does that matter to the underwriter?
It does. But he's got to be given the information. A lot of brokers don't know to gather it and present it, but that's really what I do.
That is a beautiful point, because I know that companies like ours that come to events like MBJ and want to be good parts of the community are in the associations and really want to operate at a higher level, which is what we, coach our clients on in a big, big way. If they recognize that they can win from that by
Yes.
partnering with somebody who knows to take that to the insurance underwriter to get a better rate, to lower the premium, that's a huge point.
And really, underwriting by itself is, by its very nature, is discriminatory. Okay, so there's good companies and not so good companies, and great companies like the ones you just were talking about. And my job is to separate those and make the good ones look good.
That's great.